Alright, alright. Alright, alright. Ooh, 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 ooh. Alright, alright. How we doing? How we doing? Check the volume. Sounds good. We are good. Woo! It's a beautiful day. It's actually not. It's all rainy and dark and frigid. Very cold. But it is all good. Whew. Still having a little bit of a hard time out of my teeth from my surgery. Still a little bit sore. Hope everybody has been doing well. I've seen news articles like this. Apple agrees to pay over $25 million to settle lawsuit over family sharing. I'm just like, okay. Let's go take a look at their free cash flow. They don't give a doo-doo about $25 million. Just like targeted negative sentiment and like just to try and hate on the stock. Like 25 million out of their 99.58 billion dollars. It's yeah. So if I see news articles like that, I'm just like, it's so irrelevant. Oh no. Want to be a millionaire. Want to be the AI Millionaire Club. The 3 stocks to own. I want to be a millionaire. Not just a millionaire. An AI millionaire. What do we got here? They're telling us Adobe. They're telling us Apple. They're telling us AMD. Let's take a look at all of these, shall we? We'll open up a couple more Qualtromms here. Alright, they told us Adobe. Let's see what it takes to be an AI millionaire. They told us Apple. And they told us AMD. Alright. How do I become an AI millionaire? The secret sauce is these 3 holdings. Adobe. Great stock. Amazing stock even. A bit pricey, obviously. Up 75% year to date. Very, very beautiful, consistent revenue growth. Growing EBITDA, growing EPS, quarter over quarter. Growing cash flow, quarter over quarter. I mean, yeah, the right price. This could definitely be your AI Millionaire Club stock. Not bad. Adobe's pretty good. Pretty solid stonk. And what really helped them is when they went to subscription-based model for Adobe, because there for the longest time, it was just like a buy once and that's it. Like you just have the one transaction to get Adobe. And I think like you can literally tell when this company started their subscription model which I'm thinking if I was to throw a dart, it was within a 4 month period of August 29th, 2014. Is 4 months either way. And once they put in the subscription model, I don't actually know. I'm just looking at the revenue and just assuming that from that point on, they have literally had growing revenues every single quarter except for one. And it's right here. Besides that, they've literally had growing revenue every single quarter. It's kind of in this little whoa, up and down until they had the subscription based model introduced. And it's just been off to the races. Can we see that with their cash flow too? Absolutely. So that's exactly what I'm assuming. It was around that area. All right, next company that will make us an AI millionaire. Do you want to be one? I want to be one. We got Apple. Apple is close to what I think would be an okay price. It's up a lot, almost 60% year to date. But I got in on the last dip in like the 170 area, I think. Let me see here. Track my dividends. Apple. 177. Absolutely looking to dollar cost average down on any opportunities I get with Apple too. Yeah, this is just a great holding. The thing I really love about Apple, their capex isn't absolutely crazy. It's not increasing like nuts. They do smaller dividend hikes, but they do a lot of share buybacks, and they're consistently buying back their shares quarter over quarter. They're chopping at it. It doesn't matter if the stock is super expensive or not. They just very consistently buy back their shares. And if you look here, 2014 they're at 24.49 million shares, and now they're sitting at 15.81. That's probably even lower. What was it, 15.81? 15.67. So it's even lower now. Like, just super consistently buying back shares, which I get the model. I almost wish that Apple would take a similar approach to what Costco's doing when their stock is too much. Because with Costco, they never really buy back shares, I don't believe. But they reward their shareholders with these big special dividends, like monster dividends at times. This is a stock I regret selling out of. 110%. I got in at such a good price point, and I sold out of it because I had to pay off a lot of my debt because I was in over my head. This is the one that got away. Out of all my stock holdings, this is the one I would consider the one that got away. This company is just, there's nothing that they can do wrong. And they are just flooded with cash. It's absolutely crazy. Beautifully ran company. They always have more cash than debt on hand. The thing I really like about Costco is they buy their warehouses. They don't rent them, so they don't have like a bunch of leases and stuff that they're having to worry about. I think there's a little bit of that. Yeah, there's 2.4 billion in leases. Their cash flow is $17.86 billion. Like, crazy. It's crazy. What? Sold 100 million in gold bars. What is this? Ah! No! Why are people hating on this? It's such a minute amount. 100 million in gold bars, okay. And
What's inside?
oh my god, everything's a video. Nothing's just a. I want a news article about this. Fox Business, maybe? Yeah. CFO Richard Galanti. Oh my god, my kittens are running around everywhere. Richard Galanti said in September the gold bars are typically gone within a few hours. Okay. The company sold non-refundable 1 ounce gold bars from Rand Refinery through its website. I'm confused. So they sold out of gold bars that they had on their website? Why are people freaking out about this? So if you look, this kills me. When you look at this news article, Costco sold 100 million in gold bars last quarter. You think that that's like they had an investment in gold or something, the way that they have that wrote out. But it's not even the case. Apparently they put gold bars up on their website and sold them. Okay. Why they're getting hate for that, I have no idea. It's weird. If there's anything you want me to look up, any stonks, ask me anything, let me know. I'm open to any and literally everything. I'm just hanging out, looking up random news articles, and just, like I said, just hanging out with friends. This is my old portfolio right now. How things are looking. Not too shabby, if I do say so myself. Got my little doggy here. Little doggy. My dog is so needy. She's the best, though. So I can't hate on her. You're the best girl. Yeah. You're the best girl. Oh, doggy cam. Get. The best girl. Best girl. Oh, buddy, go lay down. You're a good boy. I got too many animals. Not really. I love them all. Whoa. This is Blossom. Ah. Alright, get down, honey. Good girl. Oof. Doggy cam. Oof. Go lay down. Come on, buddy. Get. I want him over here near my microphone wires. Avoid disaster to sleep well at night. SCHD. I mean, I agree with him. I agree. SCHD is a great, just buy it and forget about it. The one Warren Buffett stock that can go parabolic in 2024. Let's see what old Motley Fool's got for us here. Amazon, talking about Amazon, I mean, I agree. I absolutely agree. Amazon is like the future, to be honest. I think that it's one direction that's up when it comes to Amazon holding. But yeah, if you've got any recommendations, you want me to look up any stocks or just hang out, chit chat, let me know. Amazon's all over the place. It's still not at its high. I think its high was around $180 or something like that at one point. Ooh, what I'd kill to get back in there. Way back in there. Oof. That's silly for not buying this when it was like $80 a share. That was absolutely silly. What is it up year to date? Just curious. Amazon. Yeah, 74%. My goodness. Man, what was I thinking back in December when this thing was this low. Like, what was I doing? I really dropped the ball on that one. I feel a lot of us feel that way though. I try not to beat myself up about it, but like, Amazon's so good. This has actually been a company, like, the next time it dips at all, if this thing hits into the 120s again, I might open up a position in it. Like, I'm not opposed to holding growth stocks. The only reason that I got out of Ulta when I did is I got in at a price that I don't think I'm going to be able to have the opportunity to get into again. I got in below 400 and it just straight up. And I made like a 20% profit in less than 2 weeks. I was wanting to buy more of it, and if I'd had more of it, it was just such a small position. Like, I only had like a few $100 in it. My only regret's not going in even more with this one, because it's a beautiful company. Everything with it looks about as perfect as you want it to when it comes to, stock holding. It's just whenever I got in, it just shot up way too quickly. Like, so I got in the I think I got in at 390, and then it just rockets straight to the moon. But yeah, this is definitely one that I wouldn't mind to put this actually back on my watch list. Because I know about the company in and out. It's just, again, like, went up way too much, way too quick. And I didn't have the opportunity to buy more. And I want to have, like, a decent position in something. Look at that, the last 3 months, up 18%. I like having, pretty okay holdings. A decent size holding in something that I intend to hold for long term. Like, this is what I personally hold in my portfolio. You might look at this and be like, what do you mean you don't have that much of MasterCard? I mean, MasterCard's about 12% of my portfolio, even though it's 1.76 shares. It still makes up a pretty decent amount. And then, Hershey, Extra Space Storage, CNI, Texas Roadhouse, those are all pretty substantial positions in the portfolio. My kittens are knocking down ornaments off the tree. But yeah, right now this is just how everything's looking. It's a very simple portfolio, but it performs very well. And I definitely listen to Peter Lynch, Warren Buffett, and them. Invest in what you know. And I'm very confident that I could explain everything here to anybody. I mean, annual dividends went up our annual incomes went up quite a bit. We're up to 170. Oof. Oh. Where'd that Christmas ornament go? I'll get it in a minute. I don't know what I want to do with the portfolio next, like, going into next year. I feel like I need to change something up with it. I'm just not 100% sure what. I don't have that in there. Get out of here, bro. There we go. I just don't know exactly what I want to do. Extra Space Storage, that's been that was my call and a half. I am absolutely blowing that position up. And the thing with that is I bought all the way through. Like, even when it's in its downturn. I'm wanting to say I got into this It was honestly around here when I initially bought. I might have even been back here in June. But I bought back here. I was I'm big believer in it. I knew what the company was able to perform and how well they were able to do. So yeah, I'm pretty sure I was buying back through here. And I bought all the way down to the bottom. I think my last purchase was for $105 a share. And then just here in like the past 3 months, really the past month, not 3 months ago, a better look at it. But yeah, this thing is just shot up. Super long them. Ah! What's up, Dillo? CLS? I don't know. Let me take a look-see here. How you doing this morning? Celestica. Okay. Oh, it's up a ton. Year to date, up almost 160%. Hope you've been doing well, man. I appreciate you dropping in. You're good. That's awesome. My extra space storage has absolutely just skyrocketed. I've went from being 26% down in the position to now. I think I don't think it's going to show my percentage. I am like I'm pretty much about 16% up now. I've gained so much in that very, very short amount of time. I know JPal's helping us all out. But let me take a little looky here. Over the last 5 years, looks like this was trading pretty even, and it had like a quick jump up. Just a free cash flow yield is 5.91%, so it's not that bad. Revenue, kind of flat-ish. Free cash flow, kind of flat-ish. Growing EPS a little bit. EPS looks like it's starting to take off more. That's good. Their debt situation's not that bad. They got a good little bit of cash on hand. Buying back shares, and return on capital employed is going up. I mean, it doesn't look bad. My only concern with it would be the revenue's kind of flatted out here. But their EPS is growing. They don't have a lot of debt, not accumulating a lot of debt. The EBITDA is growing. They're buying back shares, and they have a growing return on capital employed. So, I mean, all in all, not bad. What is Ally Financial actually at now? I've been afraid of bank stocks, so that's the reason I haven't really jumped into any of them. Oh, yeah, you've really been enjoying life. Look at that. 26.7% over the last month. Congrats on that, man. That's awesome. And the good thing with Ally is you're collecting a good solid dividend. So if you were buying down through here, you've probably locked in a 4% yield, I'd imagine. And Ally is one that once these interest rates start getting more and more under control, which they are getting there now, people start buying cars again. There's only this stock's gonna blow up, man. Your average is 25.50. Yeah, that's awesome. That is awesome. Honestly, similar story to my extra space storage. In a way, I was buying that thing down in the 100s, and now it's at 150s. Yeah, I mean, if you're long on something, DCA through, buy it when it drops, and just enjoy the ride. IIPR is doing well, too. Let's take a look at it. Innovated Industrial Properties. Over the last month. Oh, yeah, very similar story, about 25% up. Very nice. So I think tomorrow for the live stream, I might start it at 10. It seems like it would probably be a good start time. I started at 9:30 this morning. It is a big yielder. 7%. Monstrous yield. Very nice. It looks like their financial situation's not that bad either. Oh yeah, that's very manageable. That's not bad at all. Yeah, this is one I've been looking at, but like just it's such a high yield. It's so nuts. The dividend snowball with this one will be very very nice and similar to your ally as well. You're gonna enjoy those dividend reinvestments over time. Are you dripping your dividends, or are you just redistributing them as you see fit? Because I've just been dripping everything. Just keep it simple. And I've actually been seeing the effects of that through SCHD, because my payments of like through drip and DCA, I went from 12 to like 16 to 19 to I think over 20 or right at $20 this last time. I drip in my Robinhood, I drip in M1, but it drips into my entire portfolio. Okay, yeah. M1 doesn't have like a drip feature to turn on. Bought Hershey and John Deere since they were undervalued. Oh yeah, John Deere was such a great price. And Hershey's too good. It's too good still. People are just terrified right now because the Ozempic around it. Look at that, 181. I already own so much of this, but I'm gonna be honest. I might buy more. My Hershey position, my average buy is 210. I might buy more Hershey. It keeps dropping. I'm just going to keep buying it. It's just, I'm so long this company. And I think all the negative sentiment and negative news and stuff around it is just something that's temporary. And I think if I just keep doing what I'm doing, I am going to enjoy the ride with this one. There's just so many good things going for it. Four beaten down consumer giants. Let's see what the big brain peoples are saying. Let's take a look. Archer Daniels. I have no clue what that is. Coca-Cola. You still think Coca-Cola's beaten down? Hershey and Procter & Gamble. Procter & Gamble is one that is creeping into my interest zone. 143.96 now. If this keeps dipping, I'd love to see this get into the 130s. I might have to jump into it. Pays the dividends soon, right? IIPR? I don't know. We can take a look. IIPR dividend. We'll take us a look-see here. The ex-dividend date is the 28th, and they pay out January 12th. Oh, excuse me. Right there. Looks like I gave a little bit of a dividend increase from $1.80 to $1.82. Yeah, that's 7% dividend yield. I bet you are enjoying that. But yeah, Procter & Gamble's been one I've been looking at. I know it's something that's not going to grow super quickly and just to the moon. I actually need to add it to my watch list. It is one I've been eyeballing. Because right now, with everything I've got set up, I don't think adding Procter & Gamble into the mix would be a terrible idea. Now, I've had to refix up my watch list here. It was a mess beforehand. Yeah, we'll add OPG in there. So what's Coke at for people to be still saying it's down? 58. I mean, it's not terrible. I just don't. The inconsistency with these is what kills me with Coke. Its EPS is all over the place. Its free cash flow is all over the place. I mean, since 2020, it looks like it's been marching upward. But still, it's not as predictable as I like. I like companies that have the most predictable looking revenue cash flow charts. I can like look at it and almost tell you where it's going to be. An example is like this. Revenue, EBITDA, cash flow, net income, EPS. Just up and to the right, up and to the right, up and to the right. Love it. Ulta, I actually got out of Ulta because I had such a small position in it and it had went up so much on me that I didn't see there being an opportunity for me to add any more soon. As you know, I got in like $3.90 and it shot up $100 a share. And in my brain bits, I was like, I'm not going to be able to add to this position for a while, and I want to. So I just took what little bit I had on the table with it, and I think I just put it all in the SCHD. I still really love the company. It's just way too much, way too quickly. Yeah, in the course of a month, less than a month, it shot up $100 a share. I mean, I got a nice 25% gain on it in 2 weeks. I mean, it's not really my intentions. I would love to had more of it. If I would have had, I didn't even have a full share of it. This is definitely one though that's on my watch list. This thing dips below 400 again. We going in. We are going in. It gives you the chances here and there. You do have some opportunities to buy on those dips. I'm just going to be patient with it. If it comes, it comes. If it doesn't, I'm just going to wait it out. Because right now I'm currently not adding any positions. Even though I probably could. I'm just adding more Hershey and SCHD right now. I'm just constantly buying SCHD. When it's up, when it's down, when it's all around, I'm just DCAing through. Oh. Another company I wish I could go back in time and get more of is this one. This last dip it had back in the 360s. I loaded up on some more of it there. What is my average cost of this? $387. I'm super long MasterCard though. I know I paid a premium for it, but in the great words of our late Charlie Munger, it is better to pay a fair price for a great company than a great price for a fair company. And that's how I looked at MasterCard. I knew I was paying a little bit too much for it, but I was okay with it. And this is another one that I will absolutely take advantage of on every dip possible. A little pricey now with the adjusted free cash flow yield is 2.39%. But still, it's just such a good company. The return on capital employed being almost 50%. It's just nuts. Absolutely nuts. And their last dividend increase, I think, was 16%, which is, again, very, very nice. Oh, gosh. Dillo, I don't know if you knew this, man. I had surgery last week, and it was driving me nuts. I had to have 2 teeth cut out, and it still hurts a lot. It's still really swollen. That's the reason if I sound like a little bit funnier than usual. It's absolutely what it is. I got a little bit more swelling than normal this morning. But it's all good. We here. It is all good. It's okay. It's gonna feel a lot better once everything's, I'm all healed up. I'm not gonna even worry about it. Oh, excuse me. So, another holding I feel that's a little bit underrated. You want waffles? Yo, IHOP is so good. Waffles, pancakes, like, you speak in my language. I haven't been to an IHOP in forever. I want to go to IHOP. I think there's one between like an hour of me. I might have to try and make a trip out there this weekend. Oh my goodness. Whew. One company I wish would go public with their holdings, speaking of food chains, Chick-fil-A, I think would be an amazing stock. Really do. And for retail stores, I would love to see Aldi's. But they're both privately owned. They are locked down. So as bad as I would love to see that, I don't think that would be something that they will do in the future. Ew. But yeah, JPC, Genuine Parts here, I think is this company's overlooked for what they've been able to do and maintain. I mean, let's take a look at their dividend history here. There we go. Yeah, they've been growing their dividend for 67 years. 67 years. That's crazy. Crazy. And I mean, their stock's trading at a good adjusted free cash flow of 4%. It's not bad. Revenue growth over the last 5 years, not bad. Free cash flow growth, the last 5 years, double digit. And not bad. And that's the thing with me. I'm thinking about trying to broaden out, have more holdings, but like, I'm not just going to be investing to be investing. I want to make sure that I understand the ins and outs of companies first. And this is definitely one that I feel would be a pretty decent add-on. Honestly, I wouldn't mind trimming just a little bit of SCHD so I could open a position in this. When was the last time it was down to this price? Very rarely. It doesn't look like it's something that dips all that often. And it's got its ups and downs, but it's been in a downward trend here lately. I don't know. I might. I've been really thinking about what to do with the portfolio, and I have really been thinking about trimming my SCHD and opening up a couple of individual positions. Cause I've got a lot of SCHD, and I mean, I'm not hating on it. It's a great company. It's just eventually I wouldn't mind going to all individual holdings. I feel like I would be able to get better returns, add some risk. I mean, maybe. I have been thinking about that with SCHD. I'm just torn. I mean, I do like the ETF. It's nice, but I feel like with return wise, I can make more profit by buying. Let's say I sell out of my SCHD. I throw that money into Visa, Procter and Gamble, JPC. And honestly, probably a little bit of Kroger. I don't know though. Like that's the thing. Like risk is good, but I want to make sure that I'm not like super overpaying for things. Like Visa, love the company. I do have MasterCard, so that's the reason I'm a little hesitant with like pulling the trigger on this one. But even though right now it is ran up, uh, it has an adjusted cash flow yield over 3% still. So even though this has ran up like it has, it's still selling at a better adjusted free cash flow yield than like Apple or MasterCard or Microsoft. And all those like, and it's another one that fits what I love, which is up and to the right, up and to the right, up and to the right, up and to the right. As much cash as debt. Big dividend increases. Shares outstanding decreasing. I mean, Kroger. The only reason I like it is I do think it's got a great future ahead of it. Adjusted cash flow yield is above 6%. It just screams buy to me. Revenue, not awful, but growing. EDCAN. Good companies, no matter the price. Yeah, I mean, I see that too. Yeah, I mean, it's not a bad plan at all. Um, I mean, I don't know. The more and more I like think about it, I really wouldn't mind selling out of uh, my SHD and start opening up some individual positions. Welcome, Valerie. What do you think about Jeppy? I personally don't. I'm not a fan of Jeppy for the reason of does look solid on. I mean, the I'll take a quicker deep dive into it here in just a second. For that, Valerie's a dog. If I was to invest in a into just like an income ETF, I would probably do this one, SPYI. And the reason being, SPYI is this: the tax efficiency. That's the thing that I like a whole lot about it. it's like a 60-40 long-term, short-term uh, tax percentage on it. And I mean, they pay a good bit too. Um, you look here. I mean, it's paid above 40%, and it's smooth. It's not like up and down and all around. Or if you look at Jeppy, I think Jeppy's got spikes in it. Yeah, it's a little more all over the place. And when it comes to anything investing, I like consistency. I like things that are drawn out. I know what to expect. And with Jeppy, am I going to be getting 61 cents a share? Or am I going to be getting 29 cents a share? That's a huge swing in my eyes. Absolutely monstrous swing. Or with SPYI, I know what I'm getting. I'm getting 49 cents, 48 cents, very reliably through and through. So I mean, if I was to hold one, it would definitely be this one. Yeah, I mean, you can invest in SPY, but if you're wanting something that's going to pay you a good bit of income, I like SPI, and another one that I really really like is Devo. I'm a big fan of Devo. And the reason being is Devo actually's got, you get some appreciation with it. Devo's up 23.57% over the last 5 years, and you're getting a good solid like 3 to 4% dividend monthly. And again, very consistent, 15 to 14 cents a share for pretty much forever. But yeah, if I was to own a money generator, it would definitely be one of those two. And you're welcome. But yeah, back to old Kroger. I really, I feel good about the company. Quarter over quarter, good, consistent, slow growth. Um, their debt's 11.91 billion. Their EBITDA is 7.74 billion. So that's not even 2 times leverage. I would like to invest in it long term and reinvest the dividends. I mean the dividend snowball. If you're looking to just reinvest dividends and stuff, I mean it depends on, do you want more income or do you want something that's going to have a little bit of appreciation with it? Obviously, like, do your own research and stuff. But if I had to invest in one, it would either be Devo or SPYI. It would definitely be one of those two. Again, if I was wanting something just straight income base. Which, I mean, if I do what I'm wanting, what I'm saying I'm thinking about doing, if I get out of SCHD and I try to open up a bunch of like individual positions and stuff, I mean, I might look into something like that to still get a good little bit of dividends in here and there monthly. You want a monthly income at some point? I mean, you can't go wrong with either of those. SPIY, Devo. Uh, there's a couple of individual stocks. I know a real popular one's Main Street Capital. They pay monthly. Of course, the monthly dividend paying company, Realty Income. People love this a lot. So I mean, there are different options out there. There's ETFs you can do for that. There's BDCs, REITs, real estate investment trusts. There's quite a few of them that pay monthly. Agree Realty is another one. ADC. O is overvalued, overrated. I like Agreed Realty better than Realty Income, and I know a lot of people might disagree with me with that, but ADC's in a lot better companies. I feel, uh, like 4% of Realty Income, I think's portfolio that they hold is Walgreens. And that's scary. Walgreens has not been having a good year. Slight scary. But yeah, I'm still on the fence about if I want to sell out of my SCHD for individual holdings or not. Because I really think that the next year going forward, things are going to get crazy. And I still want to be able to outperform the market. I did it last year. Uh, we beat the S&P 500 by about 6.5%. And this year so far, I think I'm up 7% or so on the S&P 500. So I am still doing very well. Uh, we would be doing even better if Hershey would stop and go up. I don't mind it though. I've got a really good position in Hershey. Uh, yeah, I'm torn. I'm definitely torn between just holding SCHD and accumulating cash, or if I want to start trimming it for individual positions. Appreciate the questions though and everything. Again, I really enjoyed just jumping on here, chit chatting with everybody. It's fun. Oof. Oh, where'd the chat go? There we go. Oh, is anyone? So what do we got planned for today on this beautiful Saturday? What's everybody gonna be getting into? I'm probably gonna be doing a little bit of cleaning. Play some more of the new DLC for Pokemon. What about 3M? We will take a look at 3M. I personally think that 3M is a dice roll. It's risky just because of all the legality issues that come with it. Let's see here. April 16th, 2019. This thing was at 216 a share. It crashed below 100 into the 80s, but it is trending back up. And if we take a look here, revenue slightly increasing. Free cash flow looks like they're generating a decent amount of free cash flow. Their debt is 12 billion. So I mean, their financial sheet isn't bad. Return on capital employed's not bad. Shares outstanding, they don't really do too much there. They buy back some shares here and there. Yeah, like I'm not, as he said, none of this financial advice, but with 3M, it's just there's a lot of red tape with it. The earplug lawsuit is definitely going to be a big one. Like this is huge. The lawsuit ends in victory for vets. So they agree to pay $6.01 billion. It is, yeah. So I don't, whenever it comes to that amount of money, that you really got to look at how they're going to be able to maintain it. How are they going to be able to stay afloat? Um, like when it comes to their cash flow, I mean that's taking up a giant chunk of their stuff, and they generate 4 to 6 billion in cash year over year, and that's over 6 billion. Like, you weren't in here earlier, but I was like talking about Apple. Um, how there's this big news article about Apple having to pay out $25 million to settle lawsuit over family sharing. 25 million of their 99.58 billion. So that's nothing. When it comes to $6 billion of your, you generate 3 to 5 billion a year. That's a substantial amount. Like, I think I read they got like a payment plan or something for it, but I just personally, I'm not a fan of the company. Um, I just don't. I not financial advice. I don't see great growth coming out of 3M, and it's because of the lawsuits and stuff. There are a lot of other really good stocks out there that you can invest in. Um, Procter and Gamble's not a bad option. Genuine Parts Company. There's a lot of things that are out there. Vici is better. Yeah, Vici. Vici's a great one. Again, it depends on your investing goals and how you're wanting to do things going forward. Just I personally, I'm staying away from 3M. But yeah, Vici still got over a 5% dividend yield. A very powerful REIT. I will never own that many. Oh my goodness. I would cry with that many individual holdings. Oh my god. No. I have 7. This is my portfolio. This is it. Short, sweet, and to the point. At most, and I mean at most, I would probably own like 10 to 12 holdings. And that's like the max that I would want to deal with. Because when it comes to that, you don't want to over diversify. An old famous wording of Peter Lynch, diversification. You don't want to diversify just to be diversifying. Invest in what you know. That's what I've been doing. And I've been beating S&P 500 the last 2 years. Need some VGT. What is VGT? VGT ETF. Oh, information tech. Yeah. I've made a lot of mistakes this year. One of them being I sold out of Microsoft. That is a big one on me. Big old mistake. I got into Microsoft at 250, I believe. Wrote it up. It got up to right at 340. And I sold out of it. I sold out of it because like I had just sold almost all of my holdings to pay off my credit cards. And I think I had Microsoft and Vici. And that was the only 2 holdings I had. And I had like a little over $2,000 invested, and I wanted to like spread things out a little bit better. But yeah, if I could go back, I definitely would have just held on to it. But it is what it is. Maybe the world will give me another opportunity to jump in. Vici is the GOAT. The GOAT. Hey, I mean, when it comes to real estate, REITs, I like extra space storage. I don't think that they're bad. Look at that. And it's only going to be getting better from here. I mean, IIPRs get a really good yield. You can, if their FFO is, maintainable, and it's not outrageously high, let it keep rolling into itself. SOXS. Let's see here. Oh, okay. It's a leverage semiconductors. I mean, if there's a downtrend, and if stocks start dropping, this could be definitely a really big one. Oh my goodness. What? Yo, back in oh my god, back in 2018, this thing was 20,000 a share. What? And it's now $6 a share? That's terrifying. I usually don't jump into leverage things. If I was gonna get into anything leverage related at all, if you were just like you have to have a leverage position or you're gonna explode, it'd definitely be TMF. Once the interest rates and stuff start getting cut and all that fun time, treasuries and stuff, these are going to go back up. They've been beaten down. But like, look at these hikes here. Year to date down 17.91. This thing was it had a stock split. They would take your one share and give you 10. So yeah, this thing was in a $3 at one point, which is $39.80 technically. And it's already shot back up to 65. I know a lot of people are long treasuries right now because of SOXX is the inverse. Yeah. Oh yeah. I mean, crazy. Yeah, triple leverage is just it's scary. Oh, this isn't triple leverage. Is this just straight semiconductors? It looks to be the case, being up 65% year to date. I know it's been a great year for semiconductors. Broadcom, Nvidia, even Intel has been absolutely on fire lately. Yeah, look at that. Intel's up 72% year to date. Crazy. And I was looking at this in the 20s. I remember that. But again, I just the inconsistencies. And if you look at the all-time chart, Intel never got back to where they were during the dot-com bubble. Never got back to it. If you would have bought this at the peak in 20 in 20 in 2000, you would have been negative forever. You would have never been positive still yet. Yeah, I know there's a portfolio out there that are just like, oh, one day. And they had that dividend cut with them. Yeah. I mean, semiconductors are the future. Everything's going to technology. Everything's going to AI. But I'm a simple man. I'm a simple little fellow. So, what kind of things do you hold, Valerie? How's your portfolio looking and been doing? I know Dillo's been killing it with some Ally and IAPRs up. ENPH. Let's take a look. See ya. Oh, in phase. Oh, in phase. So my personal prediction. The D Dog's up for you as well. I'll take a look at it here in a second. So for in phase, beaten down a lot year to date, like a lot, over the past year even more. Yeah, this thing was over 300 a share, dropped all the way down into the 70s, now sitting at 123. My personal thoughts on it, I think that this is a great long-term hold. Not financial advice, just my personal opinion. Reason being, interest rates are going to start going down. Once that starts going down, people are going to be able to afford and buy solar panels again. Because when it comes to solar panels, most of the time you have to finance those, and that's really hurt them. Their sales, I'm pretty sure, slowed. Yep, are in decline right now. But once things turn around and those interest rates start going down, I see Enphase being a very good hold for the long term. Oh yeah, BEPC as well. Brookfield Renewables. I mean, it's like a collection of utilities, right? Owns a portfolio of renewable energy power generating facilities. Hydroelectric, wind, solar power. It's a newer company too, apparently. Yeah, I've seen Brookfield and I think BK is another one. No, not BL. BK. I thought it was BK. BM maybe. I don't know. There's another one that's similar to Brookfield that a lot of people have been, your bigger investors have been buying into. Kind of like little miniature Berkshire Hathaways. BO, D-Dog's been doing well for you? Let me take a looky here and see what it's looking like. D-Dog, Data Dog, look at that. Over the last month, yeah, it's up pretty big. Revenue growth, cash flow growth, EPS positive. More cash than debt on hand, growing cash. That's nice. My only thing is with their stock-based comp. That's my only knock on it. Next, Era Energy. That's another good one. They had a big downturn too. But yeah, if Datadog can stop issuing out more shares and get their stock-based compensation under control, this stock would be amazing. Absolutely amazing. Realty Income at 50, Disney at 92, JP at 52. Disney, that's a dart throw, but I mean they're bringing back their dividend and things look like they're starting to, be more and more in control with their financials. I mean, to an extent, I understand stock-based comp, but don't let it be more than what your cash flow is. It's my personal thing. Oh yeah, I mean you gotta offer out the packages and stuff to recruit the good ones. Realty Income, Disney, JetB, 3M. Is that your four? Do you got a smaller portfolio, 4 holdings? I mean, nothing wrong with that. I mean, I've only got 7, and one of those is an ETF. Ah. Yeah, Amazon and Google, they issue out a lot of shares too. So I mean, I think Google issues out a lot more. Let's take a looky here. I mean, it's a good little bit. It's like a third almost. I like swing trade with them. Okay. With the Soxes. I get it. Yeah. I love Amazon. Everyone's addicted to Amazon. I could type for a second. I mean, their free cash flows are also a little rough. They've had a rough 2 years, though, to be fair. Besides that, things were kind of doing a little bit better. Yeah, they had 2 negative quarters of cash flow last year and the year before that. But it's Amazon. So, Dillo, Valerie, while I have you here, if you haven't watched my recent uploads, if you get a chance after this, I would greatly appreciate it. Tomorrow is a completely different video than what I usually do. It's like a skit in a way. I just thought it'd be fun, something different. So if you could also give that a watch tomorrow whenever it goes live, probably around 8. I am wanting to get as much feedback on that as possible, because I've got a couple of other ideas in the works, in the old brain, that I think would be funny videos. It's still dealing with investing. It's just it's a different little idea I had, and I went through with it this morning. But I appreciate you both in here hanging out, chit chatting. I'm probably gonna go for probably another 10 minutes or so, and get me something to eat and clean up around the house a little bit, play some video games, hang out. Yeah, to tomorrow's live stream, would it be better? Because I'm going to try to live stream on the weekends. I'll send out a message in the community tab if I can or if I can't. Um, I appreciate that. Uh, but yeah, I'm. Would it be better to try and do it around 10? Oh, you gotta head out. All right, Dillo, you take care, buddy. I appreciate you coming in, chit chatting with me, hanging out. You the best. But yeah, I 9:30 or 10 probably be the better times for streams. So I might try starting at 10 tomorrow, a little bit later. But yeah, anything else, Valerie? Want to talk about or ask me anything? I can look up a stonk. If not, I might go and get a head start on some cleaning and stuff around here. But I do appreciate you for hanging out in here. That's all good. But yeah, thinking about calling it there. This was fun. Again, I love interacting with you and chit chatting. I hope you have a great evening. Tomorrow, 9:30, 10 o'clock. I don't know which one yet, but I'll be putting it in the community tab when I'm going to go live. But yeah, take care. Have a great evening, and I'll